You can read it.
On 1st April, Anna started business with 8,000 and other transactions for this month are April 2nd and so on.
What are you required to do?
We are required to show the journal entries to record the transaction.
That's all what you need. Simple. Show the journal entries. And how do you show the journal entries? It's about showing which account is debited, which one is credited, yeah?
Yeah.
Yeah, those are the journal entries. Debited and credited. Then we'll have just the details here. Right? These are amounts. And the date. Okay? Let's start from the 23rd. April 2nd. What is happening?
April 22nd. April's just 2nd. Purchases furniture for cash.
Yeah, this is trick now. What is this business doing? Let's start from top. 1st April, what is happening?
1st April, we have to, we got 8,000. We started the business with 8,000.
Exactly. So what are you debiting?
We are debiting the 8,000, yeah? The capital account.
Okay. So which account is being credited?
Credited.
You're debiting cash. You're using cash, isn't it?
Yeah, the cash
debiting
account to capital account. The capital account is being debited. No, the capital account is being credited. The cash account is being debited.
like this.
Yes.
Yeah, you know that we are about. That was for the first one.
Yeah.
You got it? If you want, you can even write the second one from here. The second transaction. Purchases furniture for cash. What is happening in the cash account? Which account is credited?
The purchase account is giving to the cash account. The purchase account is receiving. The cash account is being credited.
The cash account is giving 2,000 to furniture. The reason why we are not saying purchases of, furniture is non-current asset. You may not really call it a purchase.
Okay.
Unless the business is doing the business of, is in the business of selling these furnitures or buying these furnitures and selling. You get the point.
Yeah, makes sense.
Yeah, that's when you can say it's a purchase. But here, let's just write furniture. Same amount.
Okay. Next. April 5, purchases goods for cash on time from Adam Retail.
Purchases good for cash.
Yeah.
And on time. Oh, this is interesting. What do you think?
So basically, I was very confused with this one. The purchase account, what I think according to what the teacher explained, so basically the purchase account is that it will be added with like the 1,000 and the 500. So it will be debited, both of them.
Okay.
Because you are getting both of them in a way. And then for the credit, it will be like, we are going to write 1,000 and then 500. We are going to write cash account. No, sorry.
Mhm.
We are going to write, what is it called? Because what I've written is purchase to cash. So I don't understand what I've written now. But I understand how the transaction worked. I just don't know the detail. That's it.
Mhm.
So like the 1,000 and the 500 will be, the on time to Adam will be credited because we are giving.
Mhm.
And then the goods that we purchase goods for cash. So the cash account will be also credited because we purchased using cash, you get?
Yeah. Interesting. It's a very interesting, but the way how you're explaining it, you're right, in the good track. So there are two transactions here in one transaction. The other one is on cash from the same person. Then the other one is on what? On time. So we can start by recording the one for cash. What is happening with the cash account? You're purchasing using cash. So the cash account, the first one is being what? It's credited, isn't it?
It's credited. 1,000 is being credited.
It is debited to where? To purchases. These are goods.
Yeah.
Then again, on the same day,
On the
you have the
same,
purchases.
we have an on time to Adam.
Purchases, how much is that? 500,
Yeah.
right? Now you are purchasing on time. So you have payable.
Yeah.
Is that right?
Yeah, that's correct.
We are good?
Mm-hmm.
Okay. We go to the 11th. Let me erase these now. What is happening on the 11th?
Sold goods to Bailey Brothers in cash and on time.
On the, when is that? That's on the 20th.
Mm-hmm.
Is it, it's 11, eh?
Yeah. So it's the same thing again, I think.
Or is it still the same thing? What
Yeah.
goods for bear cash?
What we are doing is that we are selling goods to Bailey
Now we
Brothers
are
for 1,300, right?
uh-huh.
And we are also
How
giving
much
them
is your
credit
selling?
on time, 750. So
The
both of
sales
them,
account will
yeah, sales account to cash account.
the sales account will be credited, yeah?
Yeah.
Which account will be debited? The first one is the cash account, eh?
Cash account will be debited, yeah.
And again, you are still selling, right?
Mm-hmm.
Sales account is selling 750 to be debited to the what? Receivables, yeah?
Yeah.
You're selling on credit. Oh, on time. Does that help?
Yeah, definitely.
Okay. On the 20th, what is happening?
On the 20th, owner withdrew cash for personal use. So cash account will be credited. No, cash account will be debited and capital account will be credited.
Repeat that again.
Cash account will be debited And capital account will be credited.
A very interesting conversation. Who is the owner of the cash account? Is it the business or an individual? Who owns the cash account?
The business.
Right. So is this money coming into the business or what?
It's going out of the business. So the business
So
will
we
be.
can, yeah, so we cannot debit the cash account, isn't it?
Yeah.
So our cash account is giving to
But
the.
sir, I have a question now.
Mhm.
Either way, the transactions are going on both the sides. You've noticed.
Mhm.
So, like, what's the point of doing this journal entry?
That is what the question is requiring us. It is saying that show the journal
Because, like,
entries.
look, let's say, for example, I mess up this same thing of doing, I credit the, I credit the, what is it called? The capital, and I debit the cash. Let's say I did this mistake.
Mm.
But when I add up, it will still balance.
And now, the issue is not really balancing. The
Mhm.
issue is about have you recorded this transaction on the right side? You remember the errors, eh? We talked about, we are still going to talk about the accounting errors. There is a bunch of errors that do not affect the agreement of a trial balance.
Okay.
But there are errors. Errors are there, but the trial balance is still balances. We call them the errors that don't affect the agreement of the trial balance. On the other hand, we still have another class of errors. Those they do affect the agreement of the trial balance.
Okay.
So the major question is not really, we're not concerned about balancing or not. Here we are just recording, you're making the journal entries, showing which account will be debited and which one is debit, a credit.
And that's how
That's
you
all.
need to get your marks, otherwise you lose them.
Yeah. So it's about crediting the correct account and debiting the correct account. So it's not the question of balancing. It's about, have you credited the right account? Have you debited the right account?
Okay.
Got it?
Yes, sir.
So the owner is withdrawing money from the cash account of the company
Mm.
and they use that money for personal use.
Yeah.
So what is happening in the cash account?
Cash account will be credited and
Yeah, the
capital.
capital. Are we sure is that capital?
So I don't know what we can say then.
You just see what it not that you don't know. So every time you withdraw money for personal use, what account do you record that transaction?
A withdrawal?
It's a withdrawal account.
Okay.
So you debit the withdrawals account. Every time you withdraw money for personal use, you debit the withdrawals account. Next transaction, please.
Okay. I paid Adam retail store. So cash account will be credited, Adam will be debited.
Right. Let's try that. That will be on the 22nd.
Mhm.
So you paid Adam retail stores. You paid Adam. So we paid. What are you paying?
We are paying them 260.
For retail stores, right? So whom are we crediting? We're crediting the stores, huh?
Mm-hmm.
260 and Adam is receiving, huh? Is that right?
Yeah.
260. Uncle Adam is receiving. Is there any question?
No, sir.
Next transaction then.
Next transaction is receive cash from Bailey Brothers.
Mm-hmm.
So
26. The
Bailey
cash account is
be
receiving.
debited. Bailey will be credited, cash account will be debited.
Cash account is being debited with 1,000. Then Bailey is credited. You've gotten it?
Yes, sir.
Mhm. And then on the 30th, we paid salary in cash. Cash account. Oh, I've written it somewhere wrong. Cash account is what? Giving.
Salary in cash. Yeah, cash account is credited, wages account will be debited.
Right. So is there any question?
No, sir. This one, I think this one is even easier.
John, is that the last one?
Yeah.
Oh,
This
this one.
one.
Everything is easier. All we need is just to be told
But
what
I
to
just
do.
realized at the end of the day, they have to, like, all I have to pay attention is to accounts now. I don't have to pay attention to the figures too much.
Exactly. Don't worry about everything. So have you seen that now life is made easy? These
Very
are
easy.
just journal entries, just the debit and credit. So when you're recording in the journal entries, you're just showing us which account will be debited, which one will be receiving in each of the transaction. That's all. You don't even do so much.
Makes sense.
Okay.
Sir.
Do you have any question?
No, sir. I'm very much sure about this.